a few months ago, we were talking about how the election of President Trump was resulting in dollar exceptionalism. The US economy was seen as the strongest economy in the world. The tax cuts were expected to boost growth. The dollar was red hot, and the US stock markets were also very, very hot. Now, interestingly, the entire picture and pretty much the entire gain, which happened from the third quarter of 2024, pre-election of President Trump, has entirely been reversed. If you look at this chart, this is the chart of the DXY, which is the dollar index. You can see the sharp rise that takes place in the run-up to the election of Mr. Trump. And then from the time he takes office, it starts to sell off. And then once he gets into the tariff war and the trade war, the dollar completely gives up its strength and in fact has broken below the lows of 23 and 24, and even now is sort of flirting with those lows. So this is a very significant reversal, I think, which has happened in the markets, and this has significant implications not just for the US but for pretty much all countries, including India, and we'll see some of that on the next few slides. So jumping through to the next slide, what do you think about when you think about the rupee appreciating? Remember, the rupee had fallen quite sharply in the early part of the year along with that dollar strength, and it had gone past the 88 mark, and it's actually now appreciated from its weakest point quite a bit. Of course, what you see here is a theoretical calculation of what would happen if the rupee were at 86.6, 84, and then 80. The rupee is currently still above 84, but essentially this brings through some benefits to the economy. And you can see over there, because a significant part of India's energy needs are imported, be it coal, be it LNG, or for that matter, crude oil. All of these have dollar prices, and because of the appreciation in the rupee, this would actually translate into savings for the Indian economy. And you can see at the bottom the savings numbers which are mentioned there at different levels of the rupee. And very recently, in fact, the rupee was quite close to the 84 mark. So, these are not insignificant in terms of the savings that accrue to the country. Remember, some of this also has an impact on the budget. Year to date, crude prices have dropped 15%, and the appreciation in the rupee plus the fact that crude oil prices are down 15% would certainly benefit the Indian economy, which is otherwise dependent on global energy resources for its requirements. So this is a positive tailwind for the Indian economy, both a function of the weak crude oil price and also the savings from the rupee appreciation. Moving on to the next slide. Obviously, without doubt, what else is the benefit from a rupee that is well contained, which is not depreciating? It will also convert into benefits in the inflation numbers. Now, why are inflation numbers important? You all know that the Monetary Policy Committee in India has a target of keeping inflation at 4% plus or minus 2%. And the number that they look at to set their target is consumer price inflation, the headline consumer price inflation. And very interestingly, you can see over there that the headline CPI, which is the orange line, has now comfortably dipped below the 4% mark, and therefore is very much in the comfort zone of the MPC. Core inflation, which is the black line, had actually been very, very subdued, because remember, what was driving headline CPI was actually food prices, but now food prices have also corrected, and therefore now the gap between CPI and core has reduced, with in fact core going slightly above the CPI at this point of time. But both numbers are within the target range of the MPC at 4 plus or minus 2%, which gives the policymakers in India a lot of comfort and flexibility in terms of handling monetary policy during such challenging times. Moving on to the next slide. What's the benefit of inflation coming down? What's the benefit of the multiple measures that RBI has taken to increase liquidity in the market? You can see this impact over here. We have just compared the PSU Bank credit certificate of deposit yield in December 24 to the 29th April 2025 values. And you can see the drop is almost 80 basis points. Even for commercial paper, which is in the middle, there is an 85 basis point drop. And for 3-year AAA corporate bonds, there is a 60 basis point drop. So in a way, RBI now has the ability, in light of the strong rupee as well, or at least no longer a strong dollar, to be able to inject liquidity into the local markets. They've been able to reduce the policy rate. The MPC has reduced the policy rate by 50 basis points. And this is translating into a direct beneficiary for borrowers, not only for the banks, but also for companies. And remember, because of the prime lending rate system, this will also translate into the cost of mortgages and other floating rate loans that consumers take. Even those rates would eventually come down to the same extent that you are seeing here.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.